China has held its breath for over 20 years this time. It won't tolerate anymore. Published on the Chinese internet, October 12, 2025. Hello everyone. Our channel selects viewpoints and analytical articles from think tanks and well-known figures within the Chinese internet and presents them to Western readers so that everyone can understand how China thinks. If you find this helpful, please subscribe, like, and share our channel. Thank you. This time, China is no longer tolerating this, according to several authoritative financial media reports. In early October, the Australian mining giant BHP officially announced that, starting from the fourth quarter of 2025, part of its iron ore trade with China will, for the first time, be settled in RMB. It is worth noting that as recently as the end of September 2025, BHP was still trying to continue the past practice of pricing in US dollars, increasing its export price of iron ore to China by 15% and refusing RMB settlement. Why did the situation reverse so suddenly in less than 10 days? On September 30th, Bloomberg reported the reason behind it. Faced with Australia's tough attitude, China Mineral Resources Group directly notified all domestic steel mills to suspend the purchase of any BHP iron ore settled in US dollars. At the same time, a hard rule was issued through the ports. Only BHP ships paid for in RMB would be allowed to dock and unload. This tough change has caused great concern in the Australian government. As the world's largest steel producer and iron ore importer, China's annual iron ore imports account for more than 60% of global trade. In 2024, China's iron ore imports reached 960 million tons, with Australia accounting for over 55% of that. BHP alone occupies about 35% of China's iron ore import market. However, although China is a big buyer, it has never had the pricing power for iron ore and has been in a passive position, holding back frustration for more than 20 years. In the past, because China's dependence on Australian iron ore had long exceeded 60%. Although Australia dared not truly cut off supply, its most common tactic was to frequently release messages about possible supply disruptions, selling iron ore that cost only over $10 per ton to mine at a price as high as $130 per ton to China, earning nearly $100 in astonishing profit per ton. In addition, between 2003 and 2009, China suffered heavy losses because of an insider, a Chinese-born Australian named Stern, who took advantage of his position to leak Chinese steel companies' commercial secrets to the Australian side, causing China to be in an extremely passive position in price negotiations. And over 6 years, this made China spend hundreds of billions of yuan. A more hidden form of control was that international iron ore trade had long followed the old rule of US dollar pricing and US dollar settlement. The pricing power was firmly held by the three mining giants BHP, Rio Tinto, and Vale. Chinese steel companies could only passively follow and bear the cost pressure brought by fluctuations in the US dollar price, according to statistics from the China Iron and Steel Association. Between 2020 and 2024, due to exchange rate fluctuations alone, China's steel industry paid more than 80 billion RMB in additional exchange costs, equivalent to about 15% of the industry's average annual profit. Facing this long-standing passive situation, in 2022 China established the China Mineral Resources Group CMRG. This important state-owned enterprise, directly managed by the central government, has the core mission of integrating domestic iron ore demand, turning fighting alone into unified external negotiation, and improving China's bargaining power in the global iron ore market. This time, China can act tough mainly because its backup is ready. The Simandou iron mine in Guinea, a world-class mine, has already started production and can produce 120 million tons of high-quality iron ore annually. Together with increased domestic mining and with the opening of Peru's Shanghai port, which is expected to drive South American iron ore supply, future import channels will become broader. The key point is that Brazil's Vale and Australia's Rio Tinto had already accepted RMB settlement long ago. Therefore, this time China's stance was either lower prices and accept RMB payment or get out overall. China's demand for RMB-denominated pricing in bulk commodities marks a shift from passive acceptance to active counteraction. It targets not only Australia, but also the US dollar system itself, according to data from the People's Bank of China. If the proportion of RMB settlement in China-Australia iron ore trade reaches 30%, it will drive about 200 billion RMB of cross-border flows annually, equivalent to 15% of the current global offshore RMB market size. This step is of far-reaching significance. It marks that the internationalization of the RMB has expanded from the energy sector to the core area of industrial raw materials, moving from the periphery to the center of international trade. At the same time as BHP's concession, Australia's Minister for Agriculture, Murray Watt, also confirmed through official channels that the RMB settlement system for wool and barley trade between China and Australia has completed full process connectivity. The first batch of 20,000 tons of barley has been loaded at the port of Melbourne and is now heading toward grain ports along China's southeast coast, with the two core areas of China-Australia trade, iron ore and agriculture, simultaneously achieving RMB settlement. The long-standing single US dollar settlement structure has been broken in one move.